Today, November 21, 2023, Fisker receives non-compliance notice from NYSE. FSR stock is down alongside a delisting warning. Fisker stock is slipping on Friday after a non-compliance warning. This is due to a late quarterly filing. That comes alongside the company's new chief accounting officer resigning. Fisker, NYSE, FSR, stock is sliding lower on Tuesday after the electric vehicle company updated investors on a non-compliance notice from the New York Stock Exchange. A filing from the company reveals that the non-compliance notice is due to Fisker failing to file its quarterly earnings report in a timely manner. This covers its report for the quarter that ended on September 30. FSR has 6 months to file this report or face delisting. It's also possible that the NYSE may grant the company another 6 months to file the report before it starts the delisting process. What is FSR stock's problem? Fisker's problems filing a quarterly report come at the same time it's dealing with trouble keeping a chief accounting officer. The company just announced that current chief accounting officer Floris Buting has resigned. FSR stockholders will remember that this isn't the first time that Fisker has lost a chief accounting officer recently. Buting took over the role from John Finucane, who stepped down in October after 3 years in the position. The new chief accounting officer only lasted a couple of weeks before departing the company. All of this news serves as strong red flags for Fisker stock and has investors selling the company's shares this morning. As a result, Fisker stock is down 4.3% as of Tuesday morning. The stock was also down 65.8% year-to-date when markets closed on Monday. Why is Fisker stock down 12% today? It's been a rough go for Fisker investors, and unfortunately that situation remains unchanged. Shares of Fisker stock continued to decline, down another 12% in early afternoon trading. This move comes as the company received a notice of non-compliance from the NYSE. Additionally, the company's chief accounting officer just quit, within 2 weeks of starting. In the world of electric vehicle makers, Fisker has had a very rough go over the past couple years. During the special purpose acquisition era when Fisker went public, its share price rocketed higher, as investors looked for any avenue for growth in this space. However, since hitting a high of more than $30 per share in early 2021, shares of Fisker stock have since sunk to $2.05 per share at the time of writing, a new all-time low. There are a couple of company-specific factors driving this move today. First, the company announced that the New York Stock Exchange provided the company with a non-compliance notice last week. This notice calls for the company to file a Form 10-Q within 6 months, or risk delisting from the exchange. These sorts of notices are commonplace for companies that miss their filing deadlines, which Fisker has. Perhaps more concerning is the fact that Fisker's internal executive group appears to be turning over far too quickly. Just 2 weeks after Floris Buting succeeded John Finucane, who left the role after only 3 years, his resignation is the latest to be handed to the company. This sort of announcement has indicated to many investors that perhaps there's something beneath the surface investors should be concerned about. Let's dive into what investors may want to make of this news, and where to go from here. Fisker stock sinks on accounting-related news. Two of the positions that investors probably pay most attention to, outside of the CEO and COO roles of course, is the Chief Financial Officer and/or Chief Accounting Officer. This position has moved from being viewed as a necessary being counter to one that can really shape the strategic direction of a company. Accordingly, with such a clear picture of a business' internal financials, the kind of turnover we've seen at Fisker is something that certainly sends the wrong signal to the market. Investors are forced to consider that there's something going on with Fisker and its inability to file financial statements. When one chief accounting officer resigns, and the guy who replaces him resigns after 2 weeks, there could certainly be fire, given the amount of smoke investors see. We'll have to see what ultimately comes from Fisker, and how the company deals with the executive exodus it's seeing right now. For now, I think this is one EV stock that's simply too risky to own right here, for these reasons and others.